your budget, not the interest rate. You need to look at your global budget. What's your grocery bill now? What's your gasoline expense? Because when you're doing a mortgage application, that's not taken into consideration. When we evaluate your debt to income, we're not looking at your grocery bill that went from $100 to $200 over the last, 12, 14 months. You need to consider that. But my point is, unless unemployment starts to spike, most people are still able to go home and pay their bills. So I would watch supply and demand in the market. If there's, housing remains on the market longer before it sells, you see those inventory numbers creep up. And if the unemployment rate starts to increase, then I would be concerned. For now, I think it's just an uncomfortable existence of a higher interest rate that we're living through. But the reality is, I think housing values are supported by a lot of ancillary causes. So anyway, I hear the music. We're going to roll into this break, and on the other side of the break, we'll continue your questions. Hit us up at 561-291-8569 or visit the website www.mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. We are back. My name is Mark Eitel, host of the Mr. Mortgage Show, and we certainly encourage your questions to 561-291-8569. You can call or text those anytime. As I always mention, that pushes to the office during the week. So 561-291-8569 is the anytime hotline, or visit us online at www.mr.mortgage. That's mr.mortgage, never a .com, just type in mr.mortgage. So we are going to keep this train rolling with some questions. Let me see what we have. What do we have, Dom?
All right, we have Jones, who just sent us this text. Jones is asking, do I need to have my contractor to finalize remodel project costs before I can apply for refinance? Hey, Jones, that's a great question. And it kind of alludes to where we are in the market, with a lot of people who have a ton of newfound equity, and they love their neighborhood and they're not going to move, but they're going to remodel their house. So here's the answer to that question. There's two variables that you have to take into consideration. My gut answer to your question is no, because most people consider a renovation, you're redoing the kitchen, you're doing the bathrooms, painting, maybe putting on a screen enclosure, that type of stuff. So in that instance, you don't need your contractor or your budget. You just need to make sure you have enough equity to cover your project, your deal, if you will. So there's a term called tappable equity.
And all that means is that's the amount of money you can pull out of your property in the form of a cash-out refinance. So this is not an unrealistic example that I'm going to give you, because I'm talking with somebody right now that's doing this. They paid $300,000 for their house about 6 years ago, I want to say. I have to look at the actual details. I want to say around 6 years. It appraised to $1 million now. So they have about $700,000 in equity that they can pull out. Now, let's use that $1 million mark. We need to go 80% loan to value. So now that's $800,000. Take that first position out of 300. So they have $500,000 in tappable equity. Assuming $500,000 will meet all your project needs, that's all you need to do. Cash out refi to 80%, or most likely not even to that point. But in that instance, you don't need a contractor. You don't need your budget. You're just doing a cash out refi, pulling out enough cash to cover your project. And actually, it would be better to do it now than wait for interest rates to continue to rise if this is truly your circumstance. The other situation we see a lot of is where people will do a complete renovation. They're adding on to the house. They're significantly changing it. And we see this a lot in the waterfront communities. I've got a friend, Jeff, who bought on the Finger Canal down in Boca, and he's got about $3 million in tappable equity. He's got the only single-story, two-bedroom Florida-style house on his street. Everybody's built the McMansions, and he wants to go up second-story, whole 9 yards. With him, we're going to do a construction-to-perm loan, because he's actually almost rebuilding the house. So that would be a different scenario. You're going to need your contractor. You're going to need your budget, because you're doing a bona fide construction to perm loan at that point. So hopefully that answers your question. This brings up another whole category as we move forward of people who, they're going to kind of nest. They're going to stay where they are. We saw this in the last recession that we went through, and make their home the best they can make it. And, you do a cash out refi and pay off all your debt, renovate your house, and then just kind of hunker down and get through the next, economic cycle if you believe it's doom and gloom. So we've got a few refinance options in that category. One is called an R2R, which is refinance to renovate, and that's kind of like the scenario I mentioned with Jeff in Boca. It's going to be a full-blown renovation. The other is the rec loan, which we're going to reduce, eliminate, and consolidate some debt. You can also pull cash out of a rec loan. A lot of people are unaware of that. They think it's just meant to consolidate, but you can pay everything off and pull some cash out. And there are definitely some pricing advantages to the rec loan. And then lastly is an old-fashioned cash-out refi, which may make sense for you too. So hopefully that answered your question. Now's a great time to pull some of that equity if you need it, because rates are still ridiculously low. So, hey, you hear the sirens rolling up behind me. That means that this segment has come to a close. If you have questions, I encourage you to send them to 561-291-8569. That's 561-291-8569. That's the Anytime Hotline. Or visit us online at www.mr.mortgage. That's mr.mortgage.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.